Boom or bust? What's next? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is our weekly edition, and always great to be here with you. And the question is are we going to boom or are we going to bust? Is this the next leg of the up bull market, or is this the next leg of the down bear market where we are? We tend to think we're in a bear market, but and this is just a vicious rally, but certainly we are now breaking out above some levels, and it's interesting. And of course, with tomorrow being the Martin Luther King holiday, we can't really see the action until Tuesday, because although the markets will open tonight, they will be on light volume. And of course, we keep hearing about China and what happened in China. And I think that it was interesting on Thursday when the initial news came out. But actually, the grain markets tipped it off a couple hours before it actually hit the tape, as they spiked earlier. But is the China deal the big deal? And again, I don't think that this is really what we're looking at. As we have said from the beginning, we have said that China was not going to be an issue, and a deal would settle. And I think that the markets have been trading based on that there's going to be a China deal anyways. Again, I think that you're starting to see this spike, which is really more, in my opinion, the fear of missing out versus the actual deal in China being done. We can go back and look at any of these markets and see that they've been virtually moving higher anyways. We had the break in the equities, but the true products affected by the trade wars were not really that affected. And again, I think I hear about the tariffs and I hear about the stories, and to me that's more made up crap from the politicians and the lobbyists versus real actuality. I think it's these bad deals that have been made that are only made to allow the I don't know, we can't call them crooks, but to allow them to benefit, not really meant for the general population. So I think, again, are we in a new manufactured reality? Well, I think that you have to take a look at the Federal Reserve that is continuing to try to create this market. Now, again, you hear many people talk about the Fed and what they're doing, and of course, when you're worried more about what the Federal Reserve is doing than what the actual market fundamentals are doing, what the actual country is doing, what the actual growth is doing, I think therein lies problem number one. Okay, so this is more of a manufactured reality as we look at the snowball of worldwide government debt. I mean, when you take a look at for example, Japan, which is 250% of GDP is debt, you're looking at some major problems that are coming. Now, again, we can certainly watch them stall off these problems as long as they want. Again, as long as they have paper and ink, the Fed can continue to print money. So, but I think what you're seeing here is a manufactured reality of everybody's money is tied up into the stock market. Okay, the big money is tied up in the market, and so obviously you hear the constant conversation of the new wealth in America, and that is because many, IRAs, 401ks are tied directly to the market. Again, I'm a big believer in the stock market, but I'm not a big believer in the Fed, which I believe should be abolished. I believe that the Fed is a joke. I believe they are a clueless organization that is working on theory, which, as we have said, I don't know, maybe this might be the 1 millionth time, their theory does not work. Okay, their theory will create the next bubble, because that's the way that they operate, because they don't understand the real dynamics of true price discovery. They understand manipulated, manufactured reality, not the actual true reality. And I think that's one of the reasons, if you look back, if you're, let's say, my age in your 60s, and you look back, we didn't make as much money back in let's say the 70s and the 80s, but we lived a heck of a lot better based on the amount of money we made. Okay, so again, I think that this manufactured crap that we see regularly is total BS, and that is, of course, created by the Federal Reserve. It's created by not allowing the markets to be free. It's created by for all of those reasons. And where is it? Why should we have a Federal Reserve, and why should basically one person have more power than anybody? Okay, I don't understand what is not and why we are not trading in the free markets, but that is exactly what we're seeing here, a lack of true free markets. Now, we can look at the markets and we can look at the sanctions and with China. We had Mnuchin come out and well, actually, I guess he denied it, but when they talked about the potential, what was going to go on with China, which all the pundits are saying, well, that created the rally. Well, what created the rally from, let's say, 2,300 S&P to 2,600 S&P? You see, this is the point that I always get a laugh and a chuckle out of. Is okay. The big news on Thursday, Friday was the potential of a possible China deal. Okay, but what prompted the market to rally up 12% before the news came out? Okay, which is what we would consider to be a major short squeeze, a vicious market, a vicious rally. We call them bear market rallies, are the most vicious. So that would be more what I'd be looking at. So is the sanctions, is the changing of the guard going to happen? As we've said, it's going to happen anyways. It was never a really concern. And again, when you look at the things that are going on, okay, you can see that, is China going to go on a buying spree into the United States now? Are we going to, eliminate these tariffs? Is anything going to really change? And the probable answer is if we let the markets trade, if we go to free markets, then yes, the things will change a little bit. Okay, and I think that is one of the things that we have to worry about. Now, I think a bigger concern here is the credit card debt. Okay, now everybody talks about how great the economy is. And again, I'm saying it is not bad. I mean, we are seeing things of improvement, but when you look at the rising amount of credit card debt, what does that tell us? Okay, what does it tell us that more Americans are using credit cards? Okay, that is not the sign of a healthy economy. That is a sign of the borrowers getting roped into a lot of these rotten deals with these credit cards that will eventually sink and collapse the market, but it will create the biggest debt bubble in history. Because when people are out charging, we know that most cannot pay those bills on time. So when they get involved paying those usury rates that they're going to end up paying on these credit cards, what are you going to end up seeing? Well, you're going to end up seeing another meltdown, because that's exactly what they're promoting. It ties in to the ridiculousness and the cluelessness of the Fed to create more debt, more debt, more debt, more dollars, let the credit cards go. And then what happens is everybody's now stuck just paying back. Again, if you go back and read The Creature from Jekyll Island, a lot of the things that are happening are just exactly what we're seeing now. Okay, it's a joke that we allow everyone to create so much debt, because again, as we've said before, we are a by the month society. All right, nobody realizes the damage that you're actually doing to yourself by paying these ridiculous credit card rates. And again, you don't think that it's going to pop. And of course, you've got every other commercial is some peer-to-peer lender that's offering free cash. You've got these new ones popping up again that you can borrow $5,000 a night, you have it in your account by tomorrow. Do we really think that is the solution? And of course it's not, but it is the solution that has been created by the policies that we're going by now. And again, that is going to create, I think, the much bigger problem, because as we have mentioned week in and week out, okay, debt continues to storm out of control. And of course, if we look at all the corporate buybacks that eventually will have to be, obviously they borrowed money to buy back their stock. And of course, they're starting to act like CDOs, collateralized debt obligations. What is going to happen when rates do rise? Rates are going up, as nobody wants to talk about it. And the Fed there is no rate hikes in sight. interest rates have been rallying. We've seen the now after the big push down in rates, we've now seen the 30-year and the 10-year start to make some movement to the upside in rates. So where is that money going to come from? You know, it's amazing when you create a bubble. It is amazing when you create this fascination with the ability of how great everything is, when the fact is that it's great because you have a magician trying to wander, and how Chair Powell switched from actually being a real businessman to understand what really needed to be done, to then cave in to the president and cave in to Wall Street once again, very similar to what Ben Bernanke did in May of 2013, I believe it was. Okay, again, the Fed chair, and the Fed is not supposed to be concerned with what Wall Street does. Wall Street is supposed to be a free market trading environment. Just like all the other markets, they're supposed to be free markets, not manipulated markets, not manufactured markets, but free markets. And as long as we have a clueless Federal Reserve and people around the world that believe in central banking and the system of collapsing currencies and basically offering secondary issues on the cash we carry in our pocket, which can only devastate and damage us, which is why they create that artificial inflation, it's going to always be a problem. And that's why the whole central banking system, that's why we'll have another bubble. But again, central banking and the Federal Reserve is basically a joke, but not a funny joke. It's a sad joke. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. Hey everybody, you know, if you want to get a copy of that book, Gold is a Better Way, from my friend Adam Barata of Advantage Gold, all you have to do is go to bubbatrading.com/gold. That's bubbatrading.com/gold. And of course, if you want to help us out with our high school program, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, the market's soaring to the moon. There is no stopping him. But again, we asked the question, boom or bust. Okay, is this a real rally? Is this the next leg up? It's hard to say. Okay, but if we look at the action, okay, we had said we were bullish on this very show, and on all the updates, we said 2,600 we wanted to see before we would do anything. What did we see? We got through 2,600. So now what's the story? Well, if I look at the market, if I look at the Dow, if I look at the S&P, okay, if I look at the Russell, any of them, okay, basically it looks like Friday may have been, I'm not confirmed yet because we got to see the follow through now, but it may have been a blow off to the upside. Now, again, I believe in the longer run here that we can go higher. I am not going to say that we can't go higher from here, but I think this is just a rally within a bear market. I would be willing to bet, and I may do so, but I'd be willing to bet that we make new lows again this year and test those December lows of Christmas. I think this is no more than the usual. You started out the year with a dead cat bounce, which was figured. You start out the year with people that get out, forcing their way back into the market. You know, until Wednesday, Thursday, Friday last week, volume was pathetic. So now the volume looks almost like blow up. This is the final fear of missing out. I got to get in, get me into the market. So we'll see how it plays out. Again, we tonight's action, tomorrow morning, you know, the Martin Luther King holiday will not tell us much because it will be light. But I will remind you that 2004, there was a huge down move on Martin Luther King Day. But again, we'll see how it trades out. But really, we can't really make a solid commitment to what we see until Tuesday on whether or not Friday and Thursday were blow-offs to the upside. But in the meantime, again, you never want to step in front of these markets and say, this is it. Okay, we first targeted 2,600. Well, again, it went right through 2,600, so there was no reason to start selling. There's no reason to short the market yet. Watch the footprint of the market. It will give you the best idea of when to short the market. It's very similar to what's going on in the oil markets, okay? Now, of course, we called oil down to the 40s when it was in the 70s. We thought we would get to the high 30s. We got to 42. But again, we still think that there's a chance they go back to the high 30s. Right now, so here we are at around 54. I think 55 is a pretty solid level to look to be shorting. Now again, I'm already short and I would look to sell more at 55, but I'm not just going to say, okay, I'm selling it there. I will wait to see the action there to make sure that it's going to turn. But if you can start to learn and understand how the market footprint works and how the money flows in, I think you will find yourself much happier and much more comfortable. It's very similar now as we look at gold. Gold has come down and had an ugly day on Friday, but where did it close? It closed right at 1280. We're bullish gold and are willing to buy it at 1280. Now, I'm not telling you to run in and buy it today at 1280. I'm telling you to watch the action at 1280. And if it holds 1280, okay, doesn't have to go up from there, it just has to hold a level, then you probably want to step in. I think we're 1280 to 1300. I don't think that has changed in any way, shape, or form. And again, I think we've developed they have to act and have to think about it too quickly. I think that's one of the big mistakes that many of us make is we're looking at it tick by tick, minute by minute, when for most of you and most investors for sure should wait. It takes time. You know, we're trading a longer term charts. You know, if you're an active trader, you're trading shorter term charts. But if you're a longer term trader, you're trading the longer term. So don't be in such a hurry. As we've said with the bond market, okay, bonds are falling hard. Okay, after trading way up and forcing us to puke out once, we were able to have a chance to get back in. And of course, they've been consistently falling. And I think this will be the collapse of treasuries, because I do think that rates are going significantly higher. Okay, again, this is not, this is what I believe is going to happen because it always happens. We know that the Federal Reserve always butchers the exit, and this time will not be different. It's like the markets, this time will not be different. But we're seeing, okay, action in the grain markets. Now, again, if you take a look at the charts in the grain markets, they're basically all in consolidation. Okay, but they're all working and they've all basically made higher lows if you go back in time. So you're really seeing them try to work their way to the upside. They're all kind of making ascending patterns, which is more bullish if they can break out to the upside, which is why we have said we were never worried about the trade wars. We were never worried about the China deal because we always felt that it would come through. And in the end of the day, and I think this is where another thing that bothers me about the politicians and the lobbyists. If you listen to the farmers and the producers, most of them would just say to you, we had too big a crop back to back. And we are in competition, okay? But there is only so much food in the world, but when you have no issues that destroy inventory, okay, or that shorten the crop, you're gonna have some of these things happen. But in the meantime, since the trade wars started, and if we go back, that was basically back in March and April, okay? We're higher than we were, okay? The only thing that is lower really from where it was then was soybeans. And soybeans, we said before any trade war that there was an issue with soybeans. 2 years of bumper crops back to back, it's going to create some excess inventory. It's hard to create real demand when you've got a ton of inventory. Okay, but in the meantime, I think we look good. I think we're going higher. I think they're solid as can be. And of course, in the cattle markets, okay, fat cattle or live cattle, as it's called, is breaking out and made new highs. It only came off those new highs the last couple of days. And feeder cattle has been coming down, testing support. We are big fans of the cattle market and want to be buyers at some level down here. March feeders, which is where we'd be trading, we'd be buyers right here around 141. I think the live cattle needs to come down a little bit. But again, I think one of the things that tells you, and I think one of the things you look at in fat cattle, in feeder cattle, is it shows you that corn is probably going to get stronger as they suppress prices on feeder cattle. So there's a lot of things to look at here. And of course, hogs continue to hover around that 60 level. I think we're going significantly higher. I think you look for a higher price, but I think you look for opportunities to buy these at support levels. And I think that's really the focus that you should have. But remember one thing, okay? Buying is great, but having the opportunity to exit, know where your exit is, that is also important. And that's one of the things we try to talk about all the time. It's one of the reasons that we hedge all of our portfolios is so we don't have to make that key, crucial decision of when to exit. But when you're trading or you're speculating, you have to know when to exit. It's very similar to the Bitcoin cryptocurrency space right now. Now, obviously, if you were in way at the top and you're still in, that's a mistake. But if you've been buying, as we've been talking about, and we're buying still a little bit, again, not a lot. I would not take any major risk in the crypto space here. I'm in it because I feel that it plays as a lottery ticket. I believe in the concept. I believe that one of the reasons that there's so much pressure in the crypto space right now is being, again, we talked about a manufactured equity market and manipulated equity market. I think we're getting the same thing on the opposite in the cryptos because, again, think about it for a minute. The central banking system, the Federal Reserve, they have a lot to lose. If the cryptocurrency space really takes off, which I believe that it will, okay, it really takes off, it takes away the power from the Federal Reserve. If you can no longer print currency, if you can no longer create money out of thin air, and you find something that changes that, then all of a sudden it takes away their power. So you don't think that these guys are not trying to manipulate this whole currency situation? Again, I can't prove it, but I would certainly bet a lot of money on it. And I believe, and I would bet to say that the big banks have been buying a lot of the cryptos, very similar to what they do with the metals, okay? They can manipulate it for a while because they've got a lot more money, okay? But again, these are my opinions. I don't know this for a fact, but I think you will find out, as usual, when they make some of these big calls and everybody tells you they're going to zero, and then all of a sudden you find out that they had a lot of inventory. When they turn around and go up, usually that means something. And I think that is something that I would be watching. But I think this week, as we look ahead, you're going to get a sell-off in the markets. Okay. And again, I'm not saying this is going to be a big sell-off. This could be just a pullback in an opportunity to buy. But you're not going to go, excuse me, straight up. There's going to be some sort of a pullback at some point here. And then you'll have to make that decision on whether you think that's the buying opportunity or if we're going to go much lower. I believe that there's, as we get ready, there's going to be a big sell-off. But again, last year, if you remember, it was January 29th, we made the blow-off top. So this year, did we make the blow-off top on January 18th? We'll have to see. That's what we're looking at. But again, I think you have to maintain your patience. You've got a holiday week this week. There's a lot of things going on, and we become very news-driven, okay? And once the news sorts, I think you'll see some action. Let's see how that plays out. And, of course, we will cover that on every day during Bubba's Daily Update. In the meantime, we're going to step out for a break here. This is Bubba's Bottom Line. Todd Bubba Horwitz. We will be right back with more of Bubba's Bottom Line after the break. Hey, all. What's going on? We're going to have some new stuff coming out towards the end of the month here. So keep your eyes on that. And if you would like to get the book, Gold is a Better Way, go to bubbatrading.com/gold, and Adam Barata, who owns Advantage Gold, will be happy to send you a free hardcover book of Gold is a Better Way. And of course, don't forget about our high school investing program. You can help us out at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. And of course, each and every week I give you a little bit of my own commentary. And I'm going to talk about the government and the shutdown. And again, I have my opinions, and I don't need to get the trolls writing back to me about their opinions and about what they don't agree with what I'm going to say here. So to save yourself the breath and the writing and the irritation to me, this is my opinion. That's why this is an opinion piece. So go for it. Okay. In the meantime, I think this government shutdown is a total crock. Okay, I think that Pelosi and Schumer are ridiculous. I think it's sinful that the Democrats went on that retreat. I think that the disinviting of President Trump for the State of the Union, I think their lack of willing to negotiate this whole deal out. As it's been said over 100 times over the last couple of weeks. 10 years ago, 5 years ago, 8 years ago, all these times, all of these were voted for higher dollars. And I know that many of you don't like President Trump, and that's fine. I don't have a problem. You don't have to like anybody. Look, let's face it, whether you're a left or you're right, both parties suck, okay? That's the real story. But in this particular case, okay, the left is putting at risk all these 800,000 workers, and believe me, we probably don't need all the 800,000, but in the meantime, they're putting them in the sewer to try to make their point because they want to fight against Donald Trump. So they are putting their political views and everything else over country. Okay. Now, again, I am a libertarian. I'm more in the center, but I will say that I think the deal that I'm hearing, which is to allow DACA and let the people stay and get $5 billion for the wall, is a fair deal. And I think I think it's a shame. I think it's sad that Schumer and Pelosi are treating this as a purely political issue, not a real life issue and not a business issue. And if you've seen into Pelosi's district of where she's governing, it's a pretty sad state of affairs. Okay, so I think that one of the things we have to look at here is you can be left and you can support your party, but in this case, the left is dead nuts wrong. It's criminal. It's a sad state of affairs that we cannot get this wall, fence, whatever built because it needs to be built. The people that are out there, the workers are telling you that it needs to be built, and for our own safety, it needs to be built. But for the left to have voted for it every time until now, and for them to hold up 800,000 workers because they don't want to come up with the money because they want money for something else is a joke. Now, again, I'm going to repeat this last time. I understand. I'm from the school that believes that back in the day, okay, before President Trump became president, that both parties would go back in a back room with a bottle of scotch and a cigar and talk about how they're going to screw the American people and make all these bad deals, okay, these bills that are ridiculous. So again, I understand it, I get it, but I think what Pelosi and Schumer and the entire party are doing right now in regards to the wall, in regards to what's going on here, is a shame. It's criminal, and it needs to really be stopped. But of course, that's the problem with when the media is left and when the country is left. That's what you got, and that's what I got for today. Bubba's Bottom Line. That was my commentary. Everybody have a great day. Have a great weekend. We'll see you back here with Bubba's Daily Update on Tuesday, maybe tomorrow. I mean, we may do it on Monday, depending. Of course, we got 2 football games today. Personally, I don't know. I've been cold, but I like the Patriots and I like the Saints. But I'm sure, and I'm sure if I'm wrong, I'll get a lot of emails about that as well. In the meantime, have a great weekend, everybody. We'll talk to you later.